Hi, friends. Do you know something shocking? About 18 years ago, the entire world's money system almost collapsed. Big banks fell. Huge companies crashed. Millions of people lost jobs. Not in one country, not in two. The whole world shook. And guess what? It started in the United States. But the real villain was not just banks. It was insurance. Yes, insurance. And one company called AIG. Today, I'll tell you this crisis story like a bedtime story. Simple, slow, and clear. Let's begin. Let's go back to the late 1990s. America was hit by big shocks. Dot-com crash, terrorist attacks, economic fear everywhere. People stopped spending. Businesses slowed down. So the U.S. Federal Reserve said, we must make money cheap. Money became like free candy. Interest rates were slowly cut, lower, lower, and lower, until they reached around 1.75%. And this one decision changed everything. Now, loans were very cheap. People borrowed money for cars, phones, TVs, houses. Even people with low income. Even people with bad credit. Normally, banks say no to such people. But this time, banks said yes. Why? Because they were greedy. So, what is a mortgage? Let me explain simply. A mortgage is a deal. You take money to buy a house. If you don't pay back, bank takes your house. Simple. But here's the problem. Banks gave mortgages to people who could never repay. These were called subprime mortgages. High risk, very high risk. But banks didn't care. Banks gave too many loans. Their cash started running out. So they found a trick, a financial magic trick, called CDOs. So what is a CDO? Banks mixed good loans with bad loans, packed them together, sold them as one product. This box was called Collateralized Debt Obligation, CDO. Banks sold these boxes to investors, companies, pension funds, and insurance firms. Banks got cash immediately. Problem solved? Not really. Investors asked, what if people stop paying loans? Banks said, no problem. Your money is insured. And this is where AIG enters. This is the turning point. So who was AIG? AIG was a giant, America's biggest insurer, worked in 80+ countries, trusted by everyone. AIG sold something called credit default swaps, like phone insurance. If your phone breaks, insurance pays. If CDO fails, AIG pays. So investors relaxed. Even if loans fail, AIG will pay. Money poured in. AIG earned billions. But AIG made one deadly mistake. Insurance companies must keep backup money in case many claims come. But AIG didn't. They thought housing prices never fall. People will always pay. So AIG kept very little reserve. This was gambling. Banks kept lending. People kept buying houses. Prices went up and up. Everyone felt rich. But bubbles always burst. In 2006, the Federal Reserve increased rates from 1.75% to 5.25%. Loan payments jumped. Poor borrowers couldn't pay. Defaults exploded. And then everything collapsed. Banks took houses, sold them. Too many houses, too few buyers. Prices crashed. Some houses became cheaper than loans. People walked away. CDOs lost value. Investors asked AIG for money. Thousands of claims. AIG had no cash. On 15 September 2008, AIG was bankrupt. Lehman Brothers collapsed. World markets froze. This became the global financial crisis. If AIG fell completely, the world would fall with it. So the U.S. government acted. $85 billion emergency loan. Took 80% ownership. Total support $122 billion. AIG was rebuilt. By 2012, the government sold its stake and earned $22 billion profit. This crisis teaches one thing. When greed beats safety, systems collapse. Insurance is not magic. Debt is dangerous, and bubbles always burst. If you liked this video, then like, share, and subscribe.